Target Trading Academy.
All right, everybody, I'm going to go over that explanation one more time. I had a few people that just hit me up in a private message and said, hey, I only caught the tail end of that. Could you go over it again? And I'd be happy to. So what I was doing was showing how the market reacted to the long-term and short-term high-frequency traders, and of course when Jerome Powell's speech was released to the media. So on the left-hand side here, we had the market came down a bit, even though the market was trying to be bid for a while. It went sideways. As you recall, I was mentioning that we might want to buy the bottom of the channel unless it drops like a stone. We didn't get a chance down here, and it balanced for much longer than we had expected. And that what tends to happen when we get a long balance zone? The market's not going to stay in one place forever, so it's going to break up or break down. And in this case, it broke down. Remember, the news was bad. It took a little while, like yesterday, for it to kick in, but it did. And here was a clear low, and we broke down. And the short-term informed traders, the blue dashed line, the really fast guys, so they're looking for stops. They found a lot of sell stops underneath this low, the low of this range. So they ran stops. If you got run over, folks, and you were long, that's who did it to you. And then the algorithm that measures the longer-term traders, really the electronic market makers, is the white dashed line. And they started selling as well. So that's when it really got into high gear, if you like. Came down to this level, and it's just the normal auction process is always going to kick in. So the market went back and forth here, buying and selling. And then the sellers resumed the move down as more stops were hit. But really what started it from this area was the fact, in my opinion, the market makers, the electronic market makers, really got on the sell side. So they went from 90% bullish to 75% bullish, and fairly quickly down here to about 75% bearish, and drove it back down again. So when the blue dashed line starts to kick up, first and foremost, that tells us that they are getting out of their short positions. When you're short, how do you get out? How do you take profits? You got to buy it. And as they're buying, the algorithm is going to pick up that they're covering their short positions, and therefore we're going to get some readings up into the 75 and 90% bullish zone. But if it stays there, that's when I'm going to start saying maybe this thing's going to turn around a bit. And as you also recall, this is when I also mentioned that Bernanke was, I'm sorry, not Bernanke, that was quite a while ago, wasn't it? Several Fed heads ago, that Jerome Powell would be speaking to Congress today, and this is when his speech was released. So the short-term informed traders were waiting for it, came off a little bit, and then came right back into the buy zone. Running stops again, not down, but this time up over these two levels here, 58 and then again above 60 half. And very quickly, the long-term informed traders, the market makers, came out of the sell zone fairly quickly for how they generally move. So no longer in the sell zone from this area here, 62, and definitely keeping it well bid up here, 87, 90% bullish right in the zone. And so now the dips are a little more shallow. All right, now that rubber band has been stretched from 54 all the way up to 73, almost a 20 handle, essentially one-way move. Now that's long enough for any trader to say, whether they're high-frequency traders or not, to say, oh, maybe this thing's a little overdone. It's a little overcooked, better take it off the bullion ladder. And so to see it pull back a little bit is normal, again, part of the auction process. Now, if it gets supported here and comes back into the channel with the market maker still on the buy side, as long as our program is reading the tape and big buyers come in that we would find down here on this chart on the lower left, well, then we can go long as we just snap back up into the prior range that we were in. Right, but there's a little bit of selling here, which again, normal after that 20, well, it's a 19-point run. And that's how the market developed there before and after Jerome Powell.